Hello, it's Tuesday the 15th, I'm FX Plu, and this is the market brief. Don't worry about this, took a tumble at Monday Night Football, but thankfully I managed to break my fall with my face, so no harm done. Anyway, Boris has been on. He has postponed the complete removal of restrictions until July 21st. The decision is unquestionably unpopular, but if you're minded to listen to the science brains, then there is logic behind it. He claimed it was prudent with the spread of the Indian strain, as we could see up to 10 million more vaccinations in the extra time. So we trundle on for another month. Sunak was also on. He doesn't think that the economic recovery will be set back by this delay, and there will be no extension to the furlough scheme. The first change to the scheme, where employers have to contribute 10% to the furlough costs, that will also remain in place. The Federation of Small Businesses has been on. They've urged the government to extend the business rate holiday for firms that can't reopen yet. And they've also asked for bounce back loans to be written off. They hope that these steps would help many hospitality and entertainment businesses in particular survive this latest extension. And yes, it could cost another £3 billion, but hey, why not add it to the £400 billion tab that the country has already run up trying to keep the country afloat? In the market, the news didn't really affect sterling. We did pull back slightly to the bottom end of the recent trading range against the dollar. We touched 140.70 on the downside, but we recovered and we opened this morning around 141.25. So in the US, it's all rather ground to a halt ahead of the Fed meeting this week. As we know, Powell is determined that the US recovery will be solid. He does not want to risk slowing the recovery by acting too soon. And he has said for a long time that the economy can stand a little inflation in order to ensure the recovery is strong and permanent. The issue is that he's refused to speculate on how high inflation could go or how long it may last. And market attitude is really leaning towards that 5% inflation data, perhaps needing to be the catalyst for serious conversations about monetary policy change. Watch this space for now. The dollar index touched 91.60 yesterday, and euro dollar fell below 121 to 120.90. The corrections back from those limits were relatively shallow. We had 91.50 and 121.20 respectively, and that suggests that the dollar is poised for a break higher if the Fed plays ball with some forward guidance. Ahead of that though, well, we can probably expect a pretty uneventful day. If only the same could be said for Monday Night Football. Right, that's it from me. Join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue. Yeah.